the start of reducing rates is not required yet. Since last year, we have not anticipated or evaluated the implementation of easing policies by the US Federal Reserve in the videos on this channel. This is because the hexagrams in the Jing, or Book of Changes, show that the process of cutting rates has not begun yet. Did you realize that? Slowly, the Jing's hexagrams are changing. The expectation is to cut interest rates only once this year, and that will happen in November. Astonishing. Incredible, it's amazing. Even I was astonished. What are the steps to predicting so accurately? It's exciting for me to share this magical method and secret with you. Hello everyone. Let's examine another recent case for a moment. New record high prices were achieved for both gold and copper. The market is sensitive to these two metals because gold is considered an inflation hedge and a safe haven, and because copper is a metal that is linked to global growth. Copper has seen a 25% increase year to date, and gold has risen by over 17% this year, which is greater than any of the world's stock markets. Despite the diverse drivers of commodity prices, prices are rising sharply across the board. Retail investors don't seem to be joining in on the gold price, which is another interesting fact. Quarterly outflows from European and US ETFs in Q1 caused the global flows of gold ETFs to drop by 114 tons. However, there were some inflows into Asian ETFs in the quarter, and the latest data suggests that the outflows from US ETF flows may be slowing as we move into Q2, which is a trend to watch. Welcome to our channel. In today's video, we delve into the fascinating world of ancient Chinese wisdom and modern economic events. We'll explore how the ShānFēng hexagram from the Jing provides profound insights into the recent surge in gold prices following the tragic death of Iran's president. Stay tuned to understand the connections between ancient philosophies and contemporary market dynamics, and discover how these insights can help you navigate through times of geopolitical and economic instability. Don't forget to like, subscribe, and hit the notification bell for more intriguing content. Gold's glittering surge, geopolitics and market mayhem. In the world of finance and geopolitics, few events can stir the markets like the shimmer of gold against the backdrop of uncertainty. The recent surge in gold prices, catalyzed by the sudden death of Iran's president and ensuing regional tensions, is a vivid reminder of the metal's enduring appeal in times of crisis. As we navigate through this intricate tapestry of geopolitical shifts and economic speculations, the allure of gold not only reflects a sanctuary for investors, but also narrates the story of a world grappling with instability. This video delves into the multifaceted reasons behind gold's recent price rally, exploring the depths of human intrigue and the heights of market dynamics. The catalyst: death of Iran's president. In April, our channel used the video "From Planets to Profit" to indicate that someone had left the political field. The matter's sensitivity caused us to mention it only once in the video, but it has now been proved by the facts. The sudden demise of Iran's president has not just shaken political grounds, but also the financial markets. Gold, known for its stability, witnessed a notable upswing as investors scrambled to hedge against potential geopolitical instability. This event underscores the immediate impact of political uncertainties on global markets. Gold's price movement post-news was rapid, highlighting its role as a crisis commodity. Historically, such events have often led to prolonged periods of market volatility. As tensions mount, gold continues to be the go-to asset for safety-seeking investors. Historical context of gold as a safe haven. Gold's status as a safe haven is deeply rooted in history, tracing back to ancient civilizations where it was not only a medium of exchange but also a symbol of wealth and security. During times of war, economic crisis and political upheaval, gold has consistently served as a reliable store of value. The psychological comfort that gold provides cannot be overstated. Its physical tangibility and intrinsic value offer a sense of security that is often lacking in paper currencies or digital assets, which are susceptible to inflation, devaluation, and other economic risks. In modern times, this historical trust in gold continues to influence investor behavior, particularly during periods of uncertainty. The metal's ability to maintain value over time makes it a preferred choice during global crises. Current geopolitical tumult in the Middle East. The Middle East has long been a focal point of geopolitical instability, and the recent developments have only intensified the region's unpredictability. The death of Iran's president has potentially destabilizing consequences, not just locally, but for the entire geopolitical fabric of the region. We predict a period of heightened tension and uncertainty, which could involve retaliatory actions, shifts in alliances, and more aggressive posturing by regional powers. Such scenarios typically drive the demand for safe haven assets like gold as investors seek to minimize risk. Gold's price dynamics in the coming months will likely be heavily influenced by how the situation in the Middle East unfolds. If tensions escalate, the surge in gold prices could sustain or even increase. Central banks, the dragon's hoard. Central banks around the globe are increasing their gold reserves, a move reminiscent of dragons hoarding treasures in folklore. This trend is not merely a financial strategy, but also a reflection of growing mistrust in fiat currencies amidst global economic uncertainties. The reasons for this gold accumulation vary. Some central banks are preparing for possible scenarios where global trade tensions escalate, leading to a decrease in the reliability of traditional reserve currencies like the US dollar. The implications of this trend are profound. As more central banks hoard gold, the global economic landscape might see shifts in currency power dynamics, potentially leading to a re-evaluation of gold's role in international finance. The Federal Reserve's influence. Speculation about the Federal Reserve's monetary policy, particularly regarding interest rate cuts, plays a significant role in the fluctuations of gold prices. As the anticipation of rate cuts grows, gold becomes increasingly attractive as a non-yielding asset. Lower interest rates typically result in a weaker US dollar, making gold cheaper for holders of other currencies and thus driving up its demand and price. This inverse relationship between the dollar's strength and gold prices is a fundamental economic dynamic that investors closely monitor. The Fed's actions in the coming months will be critical. If the market senses a dovish turn in policy, gold could continue its upward trajectory, further fueled by its appeal as a hedge against currency devaluation. Record highs gold at $2,440. The recent rally that pushed gold prices to a record high of $2,440 per ounce was met with a mix of enthusiasm and disbelief in the markets. This milestone is not just a number, but a testament to gold's enduring appeal during times of uncertainty. Investor sentiment is currently bullish, with many viewing gold not just as a safe haven, but also as a prudent investment for capital gains. The psychological impact of reaching a new high can also not be underestimated, as it often attracts more investors to the market, further driving up demand and prices. However, such highs also prompt debates about potential bubbles and the sustainability of current price levels. As the market adjusts to this new peak, the behavior of both seasoned and new investors will be crucial in determining the future trajectory of gold prices. Gold miners' performance is another interesting aspect. The NYSE Gold Miners Index follows the same trend as the price of gold, and they move in tandem. The gap in performance suggests that gold mining stocks may get back on track at some point. While there are several safe haven assets like the Swiss franc and US Treasuries, gold stands out due to its unique properties. Unlike these financial instruments, gold does not rely on government backing or require faith in a financial system, making it particularly appealing during times of systemic risk. Furthermore, gold's liquidity and global acceptance are unmatched. It can be easily bought and sold around the world, and its value is universally recognized. which is not always the case with other safe havens that might have geographical or currency restrictions. These factors make gold a preferred choice for many investors during periods of global instability. Its allure, compounded by historical significance and physical tangibility, offers a security that is hard to replicate with other assets. The global geopolitical risk barometer is currently on the rise, with multiple factors contributing to this uptick. The death of Iran's president has injected a new dose of uncertainty into an already volatile international arena, exacerbating tensions and fostering unease. Market reactions to these geopolitical shifts are stark, with a noticeable retreat from riskier investments and a pivot towards safe havens like gold. This behavior is typical of periods when political and economic forecasts become unpredictable and the stability of traditional investments is questioned. As these geopolitical narratives unfold, the impact on global financial markets will likely be profound. Gold, with its historical role as a stabilizer, is poised to be one of the primary beneficiaries of this increased desire for security among global investors. The sudden surge in gold prices following the death of Iran's president, Ibrahim Raisi, and other high-profile figures in a helicopter crash, as well as the subsequent geopolitical tensions, can be analyzed through the lens of the ShānFēng hexagram from the Jing. This hexagram, which deals with the themes of corruption, decay, and the need for renewal, provides a profound metaphorical framework to understand the current global economic and political climate. The ShānFēng hexagram symbolizes a state of corruption and decay, often within a family or organization, and the efforts required to rectify it. The hexagram's lines describe various stages and approaches to dealing with decay, emphasizing the importance of reform, renewal, and perseverance in the face of adversity. The ancient Chinese ShānFēng hexagram, which deals with themes of decay and renewal, offers a unique lens through which to view the current geopolitical and economic climate. The principles of the ShānFēng hexagram can be particularly enlightening, providing a framework for understanding and reacting to the ongoing global shifts. Immediate market volatility following high-impact events, like the death of Iran's president, can be seen as a manifestation of the initial shock and decay described by the GU. This period demands a strategic response, which for many investors means turning to gold. Strategically, this ancient wisdom suggests the necessity for renewal and adaptation in response to decay. For global markets, this could mean diversifying portfolios, increasing allocations to safe havens, and preparing for potential long-term shifts in the global economic order. By applying these timeless principles, investors and policymakers can navigate the complexities of today's market with greater insight and foresight, using gold as a key component of their strategy to hedge against ongoing uncertainties. The sudden death of President Raisi and the subsequent geopolitical instability can be likened to the initial realization of corruption or decay as described in the ShānFēng hexagram. It's a wake-up call that demands immediate attention and response. Historically, gold has served as a reliable safe haven during times of uncertainty. The recent surge to record highs $2,440 per ounce reflects this timeless appeal. Investors seeking stability amid geopolitical tensions are acting in line with the principle of She Da Chuan by making bold moves to protect their assets. The trend of central banks stockpiling gold is a strategic adjustment in anticipation of prolonged economic instability and potential shifts in the global order. This mirrors the ShānFēng hexagram's advice to address deep-rooted issues through sustained effort and preparation. In response to rising geopolitical risks and the potential fracturing of the world order, businesses and investors are diversifying their assets to mitigate risk. This strategy aligns with the hexagram's guidance on comprehensive planning and prudent action. The helicopter crash that claimed the life of Iran's president, Ibrahim Raisi, and several high-profile officials immediately sent ripples through the global markets. the stark reminder of the fragility of political stability in critical regions like the Middle East, prompted a swift reaction among investors. Global markets, already attuned to the slightest hint of instability, reacted with heightened anxiety. The price of gold, as expected, began its ascent, mirroring the climb in geopolitical tensions and the rush for safe haven assets. This incident, while tragic, underscores the interconnectedness of geopolitical events and financial markets. The impact was not just localized, but global, affecting investor sentiment worldwide and reinforcing gold's position as a preferred sanctuary during times of crisis. The ongoing Israel-Hamas conflict presents a continual source of instability in the Middle East. This long-standing geopolitical strife not only affects the immediate region, but also has broader implications for global peace and security. The current state of the conflict, exacerbated by regional tensions following the death of Iran's president, poses a significant risk of escalation. Such an environment of sustained conflict and uncertainty tends to push investors towards safer assets, with gold being a prime beneficiary. The implications of an intensified conflict could be far-reaching, affecting everything from oil prices to global market stability. As such, gold's role as a safe haven is likely to be increasingly pertinent as stakeholders seek stability in an unpredictable geopolitical landscape. Russia's decision to open a second front in Kharkiv marks a significant escalation in its military strategy, which has profound implications for global security and market stability. Kharkiv, a key region due to its strategic and economic importance, is now at the heart of geopolitical tensions. The military developments in this region are being closely watched by the international community. Any further escalation could lead to broader conflicts, pulling in various global powers and potentially destabilizing international markets. In response to these heightened risks, the demand for gold is likely to increase as investors seek to mitigate their exposure to geopolitical risks. The situation in Kharkiv could thus play a crucial role in shaping global economic trends in the near future. The strengthening of ties between Russia and China and the opening of a second front in Kharkiv signify a shift in global power dynamics. This scenario is reminiscent of the systemic issues addressed by the ShānFēng hexagram, where significant changes are needed to restore balance and order. The recent meeting between Russian President Vladimir Putin and Chinese President Xi Jinping in Beijing has sparked considerable interest and speculation about the future of global politics. This meeting, emblematic of the strengthening ties between Russia and China, suggests a potential realignment of global alliances. The implications of this burgeoning alliance are significant, potentially leading to a new era of geopolitical dynamics characterized by a bipolar or multipolar world. Such shifts can create uncertainty in global markets, driving investors towards safe haven assets like gold. As these two powerful nations draw closer, the rest of the world watches cautiously. The strategic decisions made by Putin and Xi could dictate market movements and influence global economic policies for years to come. The death of Iran's president has exacerbated tensions in the Middle East, akin to the ShānFēng hexagram's depiction of underlying decay coming to the forefront. This instability has a ripple effect on global markets, pushing investors towards gold as a refuge. Signs of a fracturing world order are becoming increasingly evident. From the shifting alliances mentioned earlier to the growing geopolitical tensions, the global landscape is undergoing significant changes. These shifts are contributing to a sense of unease and unpredictability in international relations, which in turn affects global peace and stability. As traditional alliances and agreements come under strain, the resulting uncertainty makes gold an even more attractive investment. The impact on global peace is profound. As nations and blocs realign, the potential for conflicts increases, further emphasizing the need for assets that can withstand geopolitical shocks. Gold, with its historical role as a safe haven, is thus seeing renewed interest from investors worldwide. Throughout history, Gold has played a pivotal role during periods of turmoil, serving as a reliable store of value and a symbol of wealth. From ancient empires to modern economies, gold's appeal has remained consistent, underpinned by its physical scarcity and intrinsic value. In contemporary times, this historical significance continues to bolster gold's status as a preferred safe haven. Its proven track record during various crises, from financial meltdowns to geopolitical conflicts, reassures investors of its stability and resilience. The current global situation, marked by rising geopolitical tensions and economic uncertainties, has only reinforced gold's role. As history has shown, when the going gets tough, the tough indeed get gold, making it a cornerstone of secure investment strategies. The current market sentiment towards gold is overwhelmingly positive. As geopolitical tensions escalate and economic uncertainties loom, investors are increasingly gravitating towards gold, driving its price to new highs. This bullish sentiment is supported by gold's historical performance during similar periods of instability. Investors perceive gold not only as a safe haven, but also as a viable asset for capital appreciation. Especially in the current low interest rate environment, the surge in demand is a direct reflection of the collective market sentiment that views gold as a necessary hedge against ongoing global risks. This trend is expected to persist, especially if geopolitical and economic conditions remain volatile. BRICS countries, Brazil, Russia, India, China and South Africa, have shown a pronounced shift towards gold, driven by a combination of economic strategy and necessity. These emerging markets view gold as a crucial hedge against potential economic sanctions and currency volatility. The affinity for gold among BRICS nations is also a reflection of their attempts to challenge the traditional Western-centric financial systems. By increasing their gold reserves, these countries aim to enhance their economic sovereignty and reduce their vulnerability to external economic pressures. This strategic move towards gold is expected to intensify, particularly as global economic policies become more unpredictable and as Western sanctions continue to pose financial threats. Gold's role as a stabilizer and a unit of exchange enhances its appeal to these nations, further entrenching its position in their economic frameworks. The increased demand for gold among BRICS countries and emerging economies is a strategic hedge against the threat of Western sanctions. This mirrors the ShānFēng hexagram's emphasis on proactive measures to safeguard against external threats and ensure stability. The recent trend of central banks increasing their gold reserves is a clear indicator of diminishing confidence in traditional fiat currencies. Amidst global economic fluctuations and rising geopolitical tensions, central banks are looking to gold to provide a stable reserve asset. This trend is not just a temporary reaction to current events, but a strategic shift that acknowledges the uncertain future of global finance. By bolstering their gold reserves, central banks aim to safeguard their national economies against potential crises and currency devaluations. Future expectations suggest that this trend will continue as the global economic landscape becomes increasingly complex and unpredictable. Gold's role as a reliable reserve asset is likely to be further solidified, reaffirming its importance in central bank strategies worldwide. Speculations about the Federal Reserve potentially cutting interest rates sooner rather than later add another layer of complexity. Lower interest rates weaken the dollar, making gold more attractive, thus driving up its price. This scenario is reflective of the ShānFēng hexagram's theme of adjusting strategies in response to evolving circumstances. The rise in global geopolitical risks, from the tension in the Middle East to shifting power dynamics in major nations, significantly influences financial markets. These risks drive the demand for safe haven assets, with gold being one of the primary beneficiaries. Factors such as military conflicts, political instability and economic sanctions contribute to the uncertainty that propels investors towards gold. Its role as a protective asset during times of crisis is well established, making it a popular choice for risk-averse investors. She Da Chuan. beneficial to cross the Great River. This implies taking bold and decisive actions to overcome significant challenges. For central banks and investors, this could mean diversifying portfolios and seeking stable investments like gold. ShānFēng. This term signifies great success and prosperity that can be achieved through correct actions. In the context of the global economy, it suggests that navigating through current challenges can lead to significant positive outcomes. The market implications of rising geopolitical risks are profound. As more investors turn to gold, its price is likely to remain high, reflecting the collective anxiety and the need for a secure investment amidst global instability. In conclusion, gold's recent price surge is a multifaceted phenomenon driven by historical significance, geopolitical instability, and economic strategies. By analyzing the current geopolitical and economic landscape through the ShānFēng hexagram, we gain valuable insights into the underlying issues and the necessary steps for renewal and stability. The surge in gold prices reflects a collective move towards safety and preservation amidst uncertainty. Just as the ShānFēng hexagram advises addressing decay with deliberate action and renewal, the global response to these events underscores the timeless relevance of ancient wisdom in modern times. As we've explored through various lenses, from ancient wisdom to modern market dynamics, the precious metal's role as a safe haven has never been more pertinent. Amidst the current global gloom, gold's glitter provides not just financial security but also a beacon of stability. Its journey through the ages and its pivotal role in today's tumultuous world underscore its unmatched value and resilience. As the future unfolds, gold's luster is likely to continue shining brightly, guided by both its historical legacy and its modern-day relevance in safeguarding against an unpredictable world. To interpret global political and economic situations, this channel has consistently utilized the Jing hexagrams that are derived from a binary algorithm that includes yang and yin. To provide unique investment strategies, we use artificial intelligence tools like neural networks to analyze the results. Objective facts were used to confirm all of these later. To put it simply, we have witnessed that it is not only feasible to combine ancient Eastern wisdom with modern financial strategies, but it is also possible. This is a revolutionary invention. From embracing change to finding a balance between empathy and determination, this perspective on business management is refreshing thanks to these principles. Therefore, let's stay optimistic. These timeless and timely strategies can help businesses thrive. The importance of balance and smart strategy cannot be overstated. The key is to find the perfect spot and maintain agility, just like a tightrope walker with a safety net. To navigate the future economy, it is crucial to adopt careful and smart strategies that emphasize balance and adaptability. The current global market situation is not a simple matter. It has both favorable and unfavorable factors, as well as opportunities and risks. The environmental resources of each region on Earth are unique due to their differing latitudes and longitudes. We can summarize real-time opinions using artificial intelligence operations such as neural networks that take into account regional characteristics and national economic data. By watching our videos every week, you can keep yourself informed with a wealth of information that will improve the quality of your life in many ways with minimal time investment. In order to survive in these volatile financial environments, it is crucial to be able to adjust and avoid increased risk. Regardless of how experienced you are in investing, it's crucial to keep an eye on our video debuts to make better decisions. It's crucial to remember that knowledge is not just a tool to enhance your value, it's also a power. If you have any topics you're interested in, feel free to leave a message. To conclude this episode, I want to express my gratitude to all the viewers for their support. If you find that today's video is helpful, please like it so that you can easily find it later when you need to watch it. I want to express my gratitude for your attention. Thank you.